Alright, we'll get Lata to give us more on this. But for now, Mayuresh Joshi of Angel Broking also joins in. Mayuresh, would you be concerned about, the way the banks, the NBFCs are moving on the back of, higher cost, higher rates? There is an RBI rate hike that's expected as well.
Afternoon, Sonia. Obviously, I think the RBI meet is going to be extremely critical, and in that sense, again, if there is any justification for a rate hike, considering what we've probably seen in terms of inflationary trends, you're probably going to see the cost of funds move up marginally. Though again, I think for a lot of NBFCs, their varied mix of borrowing has probably shielded them so far. But I think average cost of yield moving up, specifically in terms of bank borrowings, I think that does push your overall spreads down. So to that bit, how much of the pass-through is actually commendable in terms of what can actually be given to the end users and how much of that has a detrimental impact in terms of the overall lending of the advances growth. I think that's to be seen, but I think well-diversified corporates.
Mayuresh, I'm really sorry to butt in. We're just at close, and the reason is because of the flashes on your screens. Now, this is interesting. This is a piece that the RBI... Mayuresh, apologies. I mean, you've just had a lot of news flow to deal with, but please do complete the point you were making. And my key simple question to you is, do you have any mid-cap ideas? Right now, people are very scared, very worried about what they're holding and whether they should be buying fresh. What would you say?
No, so Survi, I think to cut the point short, yes, I think the cost of borrowing, specifically in relation to bank borrowings, will obviously inch up, which means that the pass-through has to be in a calibrated manner because it should not impact the overall advances growth. For a lot of these NBFC companies, whether they are housing finance companies, rural-focused lending companies, the CV financiers, and so on and so forth. So I think the well-run corporates on this count, where again I think the advances growth has been stupendous, where the asset quality pressures are actually coming off. I think those are the stocks that one can actually look at within the larger universe. The caveat obviously is that if the bank RBI does hike rates, yes, it does create a knee-jerk reaction on these stocks. But yes, I think the stock that you mentioned, L&T Finance, again I think commendable to show in the quarter gone by. Asset quality pressures have come down, ROEs are expanding, and so is Cholamandalam Finance. So I think a price to book parameter, it is still very expensive. So I think that premium valuation might just justify. Generally for the mid-cap universe, yes, I think the kind of fright that we've probably seen in terms of stock market corrections, I think the ideal way of approaching these stocks is with a bottom-up approach in a staggered way and very minuscule buying. So on that count, I think two stocks that we probably like in a staggered way on declines. One obviously is Neel Kamal. The numbers have been quite stupendous in the quarter gone by. In the plastic furniture segment, it has a 39% market share. What you've probably seen in terms of volume growth of 9% in the quarter gone by should sustain. They're also getting into monoblock products, value-added products like plastic storage, as well as non-monoblock products, and that should probably help it in attaining a reasonable amount of revenue growth. Even in the material handling segment, I think it's doing pretty well. On the mattresses segment, I think it's a huge segment out there with a 3,000 odd crore market size. It's just contributed 48 odd crores. The management is of the belief that 200-300 crores can easily get added from this segment itself. So I think margins should hold up. Their format stores, they've cut down loss-making stores. You're probably looking at value additions happening in this front as well. And that should itself drive 11% top-line growth, 14% bottom-line growth. Top-line coming around 2,650 odd crores, bottom-line 160 odd crores, and the ROE expansion. The other stock we actually like is Carasite Infra Projects. Strong order book of 5,600 crore, residential is 85% in comparison with stacked comparison with peers, much better placed in terms of margin profile compared to Ahluwalia Contractors, JMC, Simplex, and valuations probably are cheaper. So again, these two south on the bottom-up approaches.
All right, so two stock ideas there as well on the fundamentals from Mayuresh. Thanks very much for joining in. We'll also thank Ashwini and Mitesh for being with us this afternoon.